Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by. This stream's about integrated bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. It's based on structured trades and the idea of building out trade plans to give you a statistical edge. It's really about the business of trading. TraderLab's a community of like-minded traders who come together to leverage their collective experience. There's not one way to trade. There's not even a right way to trade. But there's a lot of reasons why retail traders do not have sustainability. And what the TraderLab attempts to do is to help you understand how you might develop a statistical edge and to differentiate your outcomes from other retail traders who believe this is a game of being right, predictability, confirmation. And in reality, that is none of it. The business is really about statistical probabilities. The model that is successful, that the trading is really built on, in my opinion and experience, is gaming. Casinos play games that have an edge. They don't control the cards or how gamblers play the cards. They only control how they play the game. And if you look at that model, which is successful in spite of what the casinos cannot control, if they only play games with an edge in an environment that's 100% random 100% of the time, if they use those games or only play those games, and they're not attached to the outcome of any individual hand, unlike us, we are attached to every trade. So we have psychological impediments, but the casinos don't have that. What they have is an understanding of the business they're in, and that over a random distribution of outcomes, as long as they control their behavior and only play the games with the edge, they will extract over time the dollars from the gamblers. Seems to work pretty well for them, works really well for them. So if it works for them, if we actually piggyback trading on top of a proven business model, does that give you a better opportunity for sustainability in spite of it all? Think about it. And that's what the TraderLab is built on. You're all welcome to visit the TraderLab community. There's no cost. And if you're visiting in YouTube first time, welcome to TraderLab. There's a link down there. You can visit the TraderLab as well as the Bookmap Discord community, which has free education, really. Stocks, options, crypto, order flow with a high-tier tool like Bookmap, options, market maker behavior, algorithmic behavior, and a lot more. And it's all available, as well as the TraderLab. And just so you know, the TraderLab's really a professional community. It's about the business of trading, so it's not romper room. And it's really only for serious developing traders. So I know there's a lot of other opportunities out there for you to participate in other chats and influencers and the rest of it. So, and that's probably a lot of fun and maybe even useful. That's not what the TraderLab is. TraderLab's really about business. Just letting you know. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is for educational purposes only. If we get into real time, I'll do my best to share what's going on here. And like everything in trading, the outcome is always random. By the way, there's 60 PDFs of structured trades that are available to everyone at no cost in the TraderLab, as well as a library of webinars. These PDFs are really just examples of actual trades I've taken and also just screenshots. I'm not a vendor. There's no cost for this. I'm just sharing some of my experience and some of the tools I developed for myself over the years. And everything has to be vetted and reverse engineered. There is no plug and play. I'm sure many of you out there have been attempting to do plug and play, and you may have found, like many of us have, that plug and play doesn't work. So if it works for you, that's fine, and we hope it does. However, for most of us, plug and play is not the solution. It's part of the problem. So if you're not getting the results you want, in spite of your diligence and hard work, there might be more to it than just effort and trying to get, quote, more winning trades. We all want more winning trades, but we may think, through no fault of our own, that we can just replicate other trades that work. If you understand randomness and not predictability. We need to solve for a random environment, not a plug-and-play mechanical environment. We're not in a mechanical environment. We're in a random environment, same as the casinos. We need to solve for randomness. So we all have winning trades, and if you had no process other than flip the coin, you'd have winning trades. So you need to take that idea and think about it for a little bit. What does that mean? You will always have winning trades, but if you don't have an edge, the probabilities of you actually being in this business and sustaining a business, I would suspect, are very low. And the failure rate for retail traders, as you know, is rumored to be over 90% or somewhere in that area. So what are the 90% doing, and what are the others doing that are not doing what the other 90% do? It's just part of the questions that you need to answer for yourself. Now, this is the RTH. Candles, I want to give you a very simple concept. Trading is not complicated. It's actually simple. What's not simple is randomness. That, my friends, is not simple. It is part of the challenge. And while we are all looking for solutions that we can just, as I say, plug and play, the business just doesn't work that way. So we really need to approach it differently in the gaming perspective. Now, this is the higher time frame, as we call it, or intermediate time frame. Let's agree, if we can, that the higher time frame is up. I'm going to show you a couple concepts today, and then I'm going to take you into today's developing time frame, as we call it, and I don't think of it as time, but when we're in the RTH, open, high, low, close, that's time because it's controlled by the clock. But once we get into developing time frame, the clock gets put in the closet and we use something else. So what is all this? Let's look at a concept that's very logical, and you see it all the time, but most of us don't think of it. How does the market work? Well, let's look first of all what's going on here. This is a swing low, and this was the recent all-time high. Let's call that a swing high. This is called a microcomposite, and I always get questions, how do you draw a microcomposite? Well, this is sort of like in the eye of the beholder. I'll never say to you there's a right or a wrong, because it's not what's right or wrong for me, it's what statistically becomes truth for you. So you can't just take, quote, somebody's word for it, because you may experience the market differently than I do, and that's fine. But the proof, as they say, is in the statistics. It's not in anything else. So beliefs have to be proven. They can't just be fantasies, or this is logical. Logic doesn't exist in randomness. So this is illogical to our experience in the outside world. The market goes up to go down. Why does it go down? Well, this is an up day. There's sell stops here. And then the market goes down. What is in here? Buy stops. This is an excess. That's a tail. Then we open and have an inside day. What's in here? Buy stops there, sell stops here. But what is the trend? Up. So what happens? The shorts in here and here get flambéed. Up. So the market goes up to go down, shorts, which takes it up, to go down, shorts, which takes it up, longs, takes it up, longs. Where were the buy stops? There. What happens here? Get the buy stops, and then absorption and selling. Remember, the market goes up to go down to go up, goes up to go down to go up, goes up to go down, goes down to go up, goes up to go down, goes down. This is Friday. Now, follow this. Friday, 35, I think it was, or 24, can't remember. This is all in the streams if you watch them. This was support on Friday. So what does the market do? The market goes up, opens higher to go down. The market goes down, gaps, goes up. Day before yesterday. And what happens here? We find our sellers. And it was a rocket in the morning, and then we closed all the way down here. What does that tell us? The market goes up to go down. The The market goes down and takes out these stops. And why does it go down? To get inventory, to go up. And we come across the range, and now we have a scenario that suggests up. Is everybody tracking so far? I'm getting a question about a blue line in the bottom of the microcomposite. I'm not sure. I don't see a blue line. Oh, maybe you're asking about this. This is just an anchored VWAP. I don't really use them. I don't need them, but I threw it on here because it was excessive. What all it is, it's the same as everything we do in the profile, except it's an average price versus the actual high volume. So the profile shows us where the specific volume is for the whole area. This is just the average. So we know that the buyers on an average basis are under here, and the sellers are up here. Okay, now what does that have to do with what we do? Well, if we know the buyers are under here, then we know possibly that these buyers are not going to feel any pain unless we get out under here. So just saying, not important to me. I don't trade with it, but I threw it on here for you because I know, there isn't a right or wrong. It's what speaks to you. Now you're going to look at this and you're all going to jump out the window. These are market profiles. And I'm going to show you just some information. Now, if you don't understand these, there's loads of information out in Interworld, and books that have been written about it. I started working with market profiles in mid-1980s, and when I first came across them, I thought this is logical and very interesting. I couldn't do anything with them. So, I went just because I was indicator oriented and I thought I'd put them in with my indicators and have something better. All I did is create conflict. And most of us who use indicators create conflict unless we understand how they fit. And most of us never get to understand that. So let's look at what happened. Now, I just showed you. Now I want to show you this because this was a trend day up. This is aggressive buying, and this is support. Now, we had longs on this day, if you guys have followed the stream. And now let me take you into this. So we had our longs, and this is called a single. A single is a low volume area that's created by acceleration and aggressive buying. So, and then remember, the market goes up to go down. Friday, what happens? Long liquidation. Now, where was our support? It was right there. So once we got this, and then we got our selling, this set up shorts only on Friday. Why? Long liquidation. Do you want to be long going through the weekend? So we get a single there, and we have what's called a single here. So once we got rolling on Friday, it was shorts only, and it's called mean reversion. It's rotational trading, a specific plan into this. Now, here's the other thing. Why couldn't we go lower on Friday? Well, support. And what's under here? Let's come back to the concept. Sell stops, right? Well, I get a gap on Monday because the shorts that were in here are just weak longs getting out, and you got some shorts. I gap, I come down to where? Support. Does this look familiar? Support. Now I'm coming from this side. And what it says to me at this time, on this day before yesterday, that is too low, that is too low. The RTH open was there. This is a long, off to the express train, as you remember. New all-time high. But then what? We come all the way down and we close here. Uh-oh, problem, Lewis. Where's my stops? Under here. What does that do for us? Yesterday, open. But there's sell stops here. Do you want to get long? Up to you. Yesterday's high. Value area low. These are areas for shorts. And then stops back to here. Now, here's the interesting thing. Remember, the market goes up to go down, goes down to go up. The market goes up to go down, goes down to go up, goes up to go down. What's here? Stops. If I come down here and I get inventory grab and I don't have additional selling, which of course nobody knows, part of the thrill, then if we find our buyers after we collect the inventory, we can come back across the range. The market goes up to go down, goes down to go up, goes up to go down, goes down to go up. Is everybody tracking? This is basic concept before we put our first trade on. Are you guys tracking? If you're in YouTube, give me a like. And how about yeah, I get it. Rooted, I use market profile and volume profile. Volume profile really is much better in my opinion, but the only reason I use market profile is to see the singles, because you'll see the volume. So the gray here is the volume, and the letters are TPOs, they're called, and we used TPOs before we had volume. Peter Stottlemyre started using this. He was a trader at CBOT. He was using it, I think, in the I don't even know, early 70s or so. I came into the business in 1980. It got licensed by CBOT, and he actually taught me market profile, and I thought I had it, and I ended up with a mess. Just didn't understand, that my problem was the indicators, not my understanding. It was the conflict and thinking that indicators created profitability where they actually create a conflict. So I didn't kind of put it together at that point. And early on, all this thing about probabilities, we used to think about percentage wins, things like that. Just was not in alignment with the business, but nobody was telling me, because when I started, there really weren't off-floor traders. And then when I started, I was a swing trader and trend follower position. There was no day trading, unless you're down on the floor. Now, let's talk about some concepts here. You notice where this long is? Now, I'm going to spend a little time here today, and this is for all of you. This little node sticking out is called a high volume node. Now, I want you to think very basically what happens in a store. Your store is traded. The difference in your shopping experience. You all know how to trade. What you don't know probably is how to operate in a real-time auction, which is constantly changing and rotating. So this is too low, this is too high, this is the retail price at this high. So the last auction was this, and the retail price was there. If I open and I check this, and it's kind of like S&Ps, you can't buy them here anymore. And we're going to determine a new price. Now the retail price is here. The outside edge where it's on sale. Think about this. Oh, it's on sale. Too high. If I come down and now this is too low, I can go up. If I open higher, I can come down to where it was too low. You see? Now the same thing happens in fractals. What is this high volume right here? Now, this is yesterday. Too high, too low, too high, too low, retail. In other words, high volume. But what happens if I leave it and now I start the process up here? Too high, too low, too high, too low, retail. And I leave it too low. Now we start up here. Too high, too low, too high, too low. And this becomes too high. And I come back and test what was too low. Oh, it's on sale, but you can't get it here. Sorry, Charlie. And then we come back to this one. Then, and if this is too low, we come out here. Too low, too high, too low. And this is now the high volume or the retail price. And there's more. Now, this is yesterday's high. And then we open, new high. And now, and this is all before we start. If you're in TraderLab, this is where you're starting. Now I'm going to show you a post. So you can kind of get a sense of, this is 7:39 Central Time before RTH open. ETH inventory is 100% long. Potential exists for rebalancing. Other than a gap and go scenario, we might anticipate early responsive selling. Be aware of potential gap fill and value area high. Also, early potential tests of overnight VPOC and full session VWAP. These are not recs, just potential scenarios. Manage your FOMO. If you don't have a vetted opening plan, wait. You'll have all day. If we have a substantial breakout, we have mean reversion for continuation longs. That's rotational up. Yesterday was a clean out of the weak longs. Remember, the market goes up to go down and down to go up. The concept of inventory rebalancing and how the market rotates over itself in all fractals and time frames is something you should become familiar with. It's how the market works. Market mechanics. FOMO is going to be heightened. We have a new all-time high. That is not important. Market mechanics and vetted plans is what this business is all about. This is the TraderLab community. By the way, there is a library of webinars also about the process. Thanks, Ned, for curating this. Stop gambling and start winning. I would suggest you think about that. The other part is watch the primer webinar. It's got about 34,000 views. Now, there is no plug and play. This is a community of traders. If you're interested in learning about the TraderLab and the business of trading, you're all invited. And you got to invest time. No plug and play. You've probably been doing it. And if you don't have profitability other than random winners, which anybody can have, you might want to consider something else. It's up to you. Okay. Now, we're going to go into RTH Open. Now, I found today a difficult day to trade. I don't mind telling you that because some days seem like it's, you just do your thing. Other days, it does it to you. So for me, I found this, so far, it's been a kind of difficult day. And I'll show you. Now, this is the previous all-time high. This is the ETH high. Now, I'm going to read some statistics to you. And this is what makes things a little weird. We opened higher outside of range. Now, again, this is all before the open. Look at the time I'm spending for preparation. Now, I do this because I want the best opportunity to be able to anticipate behavior. Remember, I can't predict it. Now, if you can, come to TraderLab, clue us in, But in the meantime, I don't know what's going to happen. I know what might happen, so I have scenarios. I also have statistical probabilities, and like everything in statistics, the best you have is maybe. So maybe it'll do this, maybe it'll do that. How it does it, where it does it, clueless, but not ignorant. So here's the opening statistics. You have to vet these for yourself. Past performance not indicative of future results. There's a 98% probability we take out the first hour's high or low. There's a 98% probability we take out either the ETH high or low. There's a 79% probability we take out the ETH high. There's a 68% probability we get to the ETH mid. There's a 67% probability we take out the previous high or low. A 62% probability to take out the first hour's high. And there's more, but I think that'll get us started. Is everybody with me so far? Give a yes, give a no, give you I don't know. How are we doing? Okay, RTH Open. Let's get going. Now, all-time high, ETH all-time high. High probability statistics. And again, we're looking for what? Rebalancing of the overnight inventory and responsive selling. Why do we get responsive selling? New all-time high. You're hanging out long from yesterday. What might you do? You might take some profits. You are responding. So we're looking for responders, that's sellers, and we don't know. And we're also looking for potential gap fill. And what else are we looking for? I know there's a lot to look for. Potential breakout traders who will get trapped. And again, nobody knows. So it's not our job. So this is the first suggestion, that we may have too high. Now, again, no clue. Not my job. So I'm looking And I don't know, part of the thrill of randomness, where we might find our buyers. I always suggest in TraderLab, don't trade the open. Very simple. Don't do it. So I find, at least for me, I see we just had some news, some tariff news. Okay, so too high, VPOC migration. So this is suggesting down. Now what we have is selling delta. Now I'm going to go into this and I'm going to try to get you, I see, the market is now gone the other way and we're getting our statistics on the upside. So my last trade before the stream, I was sitting in a short. So I'll show that to you. And I haven't been able to see if there was a long or what's going on. So right here, too high. This is called VPOC migration. So what I'm seeing here is my seller. So I'm going, okay. And I didn't get a short. So for me, at this point, no short, I'm looking for longs. So I'm looking, if we get responsive selling, I'm looking for longs to once, because I don't know where these sellers and the rebalance will be over. So I'm looking for longs. So my first trade is going to be longs. So here is the full session VWAP. So my first trades I'm looking at are going to be out in this area. And I'm looking for reversion trading. So that's me. But it's very difficult because I don't know. Like you, I don't know. Nobody knows. VPOC migration. As long as I'm under this, it's suggesting to me that each of these levels might be too high. So too high. So I can take shorts here, but I'm not looking for shorts. I'm looking for continuation longs at this point. Just saying. And it's always in hindsight where you say to yourself, maybe I should have just got taken the responders and gone for that gap. But at this point, I'm not looking for the gap yet. So my first structured trade, if it happens, is going to be when we cross over this, because that might suggest I find too low, and it's a very aggressive trade. And I always suggest in developing traders don't do this, because the thing about trading in the open is it can be really rewarding, but you can also, of course, take a lot of stops in it. So it's over time, not any specific situation. So right here, I have my first long right here. This is my resistance right here. See it? Resistance. And the teeth are chattering. I get a scale. And I'm thinking I'm in good shape now. I've got my buyers. I've got my shorts in here. The only thing I got to do in my mind is clear this, and I see the liquidity come in. So I'm not thrilled right here, but at least I'm risk neutral. And I'm just telling you about my trades. You see what I'm seeing? So I'm still thinking I've got a good shot to come across and squeeze the sellers out. And again, this is extremely aggressive, and I always suggest for developing traders, this is the last place you want to trade because you're developing. Now, where's my resistance in the next fractal? It's here. Why? This was the retail price in the ETH. So I'm trading what's called fractals, or you guys think of them as multiple time frames, but the clock is not part of trading for me in the developing quote time frame because it's rotations. Remember how it works. Market goes down to go up, same thing, goes up to go down. Market goes down to go up, goes up to go down. Market goes down to go up. And right here, this is resistance. And I have my mid at the time, resistance. What happens here? And I got my liquidity. All right. So I now know when I'm coming up, I already know I have a problem, but what I don't know is Are the buyers going to consume these guys, the sellers, which are the icebergs, or are the sellers going to, it's like Pac-Man. Who's eating up whom? The passive side or the aggressors, and Delta shows you aggressors. Well, right here, I see big Delta, and I'm going, all right, except I got to clear out the sellers. And what else do I know? Let's come back to what I know. This is too high. Now, I don't know it'll stay too high. Where's my support? It's here. So I have resistance there, and this is my outside edge. It's called a low volume node. If I can't get out here and take everybody out who's short, I'm going to do this. And I don't know here which one. It's just, it's a level. So if I'm thinking, let me give you the thought process here. Since I'm looking for longs and I know full session VWAP and my resistance, when I clear this one, I'm going to the next one. And now I'm aligning it with a higher time frame, if you want to call it that, or the ETH. What is this VPOC thing? A volume point of control is like when you go shopping in the store, the highest volume from the last auction, which is the ETH. So I'm taking the full, and remember, the ETH is long, so I was looking for rebalancing. So in other words, responsive selling. This is why this was in the game plan for me, and not to take the short because I want to be long. And as we can take a look here now, the market had made new highs. So much for the idea of, so no shorts for me. So I was just looking long at this point. So up, but problem. So now if I can't clear these guys out and get through here, so as I'm going up this chain, this is support, this is resistance. I get VPOC migration. I don't have the champagne on ice yet, but I'm thinking I've got a good position. I have to clear the next location. Notice where we are. And notice what comes into the book. And we fall out the bottom. So what happens here to me, I get scaled. I'm thinking I'm getting the champagne on ice. This is resistance. And the way I look at these, this is Microstructure. And this is all available in TraderLab. And you may find this, of course, daunting and, give me my indicator. It's so simple. Well, trading is a random environment. That's the challenge for us because we don't know what's going to happen. We just, in the profile, are using auction market theory, which is why the market looks for too high, too low in all fractals and time frames. We're trying to trade rotations as day traders. And if we can get on a larger rotation that's typically aligned with the higher time frame, that's where potentially, depending on your thing and what you do, and it's not what I do, that's where the payday is. And then it's about trying to position, get risk neutral, and whatever happens, because we don't control that. Remember how the casinos work. They don't control the outcome of any hand. They only control how they play the game. So that's what I do. I control how I play the game. I don't have any control over what the participants do. Just like the casinos don't control the cards coming out of the deck or the gamblers, how they play the cards. And look, how am I supposed to know what's going to happen here? I can't. But what I do know is what happened here previously. The participants said, this is too high, and we left it. So as I'm coming across the range, I'm looking at resistance. There it is. Resistance, resistance. Break low. Absorption. Okay. Next area. Resistance, right there. Resistance and mid. Support. VPOC migration. Support. New retail price. Buyers. Next resistance. Here. No clue. Going to the moon. This resistance break. Now, right here, I got to hold this to continue. And not so much. Okay? So that was that one. Okay, so that's it for the long. Now, what do I get? VPOC migration. Let's look at the language. Too high, break, pullback. What is this setup, you might ask? If this is too high, let's take the concept. Too high, remember we found too low, resistance, 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 break low, what's this? Shift down, too high. What is this? Short. TraderLab structured trade. Again, advanced methodology. Where am I going? Overnight mid. You know that. What is that statistics? You wrote this down. I'm showing you how to trade process. I'm not saying you should do this. What I'm saying is you can learn pieces of it and you have to know what the probabilities are. What is the probability now? Well, 68% probability we get there. I'll take that. So once the long fails and this is too high and I come back and I break under this and I bounce back to here, too high. I'm not paying that. Okay. Too high. Too high. So this is a short. This is a short. Anyway, overnight mid is next. Now let's watch. Now, once we get this, where's our resistance? Isn't it here? Let me draw this for you. Now, I'm taking some time with this, and the reason I do this, I don't call trades because it's really a waste of your time. I assume you want to learn how to trade versus, have somebody, because you can't replicate what I do. You can learn the concepts and then break it into pieces that you align with. So we break low, and then let me show you the statistics. I have the gap. So yesterday's high is here, so I'm looking for the gap fill. I have settlement, and these are targets below, okay? And there's more, and there's ETH low. And there's more. But, trend is up, higher time frame. This is kind of the, they say the fly in the ointment. We are on the short side with the responsive side. And, right, remember the post from 7:30 Central Time this morning, which I showed you at the top of the stream, and you missed the beginning of the stream. Just watch the stream again. You're going to see process that's consistent. The market is random. So we got to anchor something. So in this microstructure, so let's look at what we know. Sellers are here. Resistance. Microstructure. Nobody knows. Support is here because they were buyers here. This is support because the volume now is here. It's like the shopping experience. They raised the price. Going up, pushes off, all good. Here, resistance. I need to get through this. I had to get through all these. Break down. Once I'm under this, and I'm under this, big trouble. And then this shifts down. That's a structured short. So anyway, now I wanted to show you this. See if I can do this. I want to show you microstructure. This right here. So what's going on in fractals? What I'm doing is I'm trading as you think of multiple time frames. And the way I think of it conceptually is like Matryoshka dolls, a vertical integration of fractals, not time frames. I'm not saying you can't use the clock, but why would you use the clock if the market's not waiting 5 minutes or 2 minutes before the participants, which is what this is really based on, is not price. Price is the result of the interaction of buyers and sellers. So do I wait 5 minutes for something, or do I just wait until I see an auction complete? Too high, Buyers are here, sellers are there. These guys were absorbed. Why do we have a green bubble? That's by delta. What's happening here? Icebergs, they're selling. Now, I don't know when I see all this, it's Pac-Man. Are the buyers going to consume the seller? Or are the sellers going to consume the buyers? Right here, my buyers are here. My buyers are here. My sellers are here. So for me to go higher, I've got to get above the sellers. Right here, sellers are here. Sellers are there. Sellers are there. Buyers absorbed here. Buyers are here. You can see it. Buyers are now above the sellers, which were there. So I know that my buyers are there. Okay, same thing. Buyers are above the sellers. Well, what happens up here? Buyers are here, sellers are here. And I don't know anything until hindsight. What happens here? Buyers are here, buyers are here. Sellers get below the buyers. So that means sellers are here, and now the sellers take control back. Uh-oh, problem. Now, in the perfect world, which of course doesn't exist here, if I got a retracement here, I would sell it. No bueno. So shift down. I'm just showing you the concept. Now, what's here? Sellers are here, buyers are here. There's your absorption. Sellers are here, and that's my retail price. I'm below it. If I don't come across, then I can sell this, or I can just sell this right here. It's a structured trade for me, and then I get this. I'm going to the next statistic. So this is just kind of the way this thing might work. Now let's keep going. What do I see here? What happens here? Remember what happened up here? A press, liquidity. What do you see here? A press, liquidity, liquidity. What is that? Sellers, passive. What is it? Icebergs. What do they want to do? Sell. Where was my buyers? Right here. What happened? See you later, Tom. We're going to send you a postcard. Okay. Well, I'm short. I'll live with that. And I got my scale at my statistical probability. And now what do I have? I've got the gap. Are we going to fill the gap? I don't know. Do you? I don't know. But what do I know here? This is a failure of the buyers there. So where might I look to sell it? Here. What do I see come in? See the sellers? See the sellers? This is how order flow helps you. And what happens here? My buyers. And what happens? They hit the sellers. Now, either we're going to Pac-Man, we're going to chew them up, come back here, or not. Watch. Now, what happens here? Now, we have a process in the TraderLab called mean reversion, underlining the term mean. Mean reversion is outside in trading. Let me just give you a sense of this. Now, when you get this, now for me, my next short or an ad would be here. I'm just saying. Because the buyers failed here. Can you see? And I got this. So I'm looking at this, and the little bit of drool's running down the chin because I'm going, well, I can take this because I've got my gap here. So I got range and room, and, whatever happens, happens. Anyway, I get my sellers here. I don't have a chance to get in. But now, with this, I have structure. This is called a low volume node. And let me show you the shopping experience again. Just think of shopping. And the way the market tends to work is too high, too low, too high, too low, retail, right? If I break away at this time in the developing quote time frame, this is too high. I'm not paying that. I'm out of here. And then we start a new auction down here. Too high, too low. So if I come back here, I can sell it. And then the idea is to rotate and then potentially go on to targets wherever below. And, part of the thrill of randomness is who knows. So I don't get back to my entry and it breaks away. Now, where might my entry be? Out here. I'm going to put just a little thing over here for you because that's the outside edge at the moment. So what I'm doing is I'm bracketing the extremes. Why is this important? Because my sellers absorb my buyers here. And again, this is where my entry was for a short. No bueno. Sailing gear. Well, what's my next information that I have? Sellers are here. Sellers are here. No bueno. See you later. What else do I know? Right here. And this is in hindsight because this is where I was looking to sell it. So I don't know this is going to happen until I see this. And my retail price resistance is here. I broke above it. Resist sellers were here. You could see them. I break above it. So the buyers are in control up until, and I'm looking again for this. So here, high volume, retail price, too low, fractal, break high, going to the moon, break low. What happened here? Selling icebergs are in here and buy stops. Watch. Break low. Right here, this is the retail price in here. Now, I know this is going to, you're going to look at this and just roll your eyes back in your head. So I'm going down in time frame as you think of it. So this is chop is retail. Break high, too low. But what happens if I fall below it? Is it possibly now it's too high? See? Short. Short. See it? So, what do I know? I'm taking fractals. What I'm showing you here, these variable, I call them variable high volume nodes. Just think auction, retail price, too high, too high, too high, wherever we find it. Now, when I go down in quote time frame, I have the same concept going on. And if I think at this point, we're going to fill the gap, maybe. Right here, no clue. There's my short. Breaks away from me. This was the last place that was too low. Now I found too high, and I break below it. This volume in here, which is my retail price, think of it like a store. These are stores. Well, I'm not paying that. Break low. Where's my resistance? There. That's a short. That's a short. And your objective is to get risk neutral. And where are you going next? Here. And a big sweep. So now, if we get a sweep, the next possibility is counter rotation. Now, let's come back and look at something. This is an outside edge, right? This is where my sellers showed up. I'm going to move this over for you because now, if I think, and I don't know at this point, like everybody else, unless you know, and then come to TraderLab, I don't know, are we going to get under here? Now, we might not, right? Because it's the gap. So it's a bit tenuous, I think is the term I want to use. I have the sweep, and this often, and I'm using the term always, maybe, often suggests a counter rotation. But where's my resistance? It's there and there. And why is this? Because this is too high, too high, too high. That was my short. This is my next short. And where's my stops? Over the swings, over the swings. So let's look at the structure. If I come outside and I come back up here, I can sell it for what's called reversion trading. It's a structured trade. Let's just see what it does. 9 a.m. we have existing home sales. Very exciting. Now we get VPOC migration. What does that say? Too high. What's this? The new retail price. I'm not paying that. You're going to get out of here. Can't argue. Just got to follow the yellow brick road and try to stay in alignment. Now, right at when we have the gap fill, it sets up a bit of a dilemma because, and again, the problem for us is it's random. So what I know is right here, I filled the gap and I've got absorption. So my buyers are here. Okay. So I have my buyers, but I get VPOC migration. That means there's more volume here. And so this is the current retail price. So everything up here is too high. The outside edge is out here. So as long as I'm here and I'm under this, I can sell it to come back here. That's called mean reversion. So let's look. Let's just see. And remember, the joke in this is mean. So right here, too low, support, Where was my resistance? Remember the shorts were here? That's a short. Where to? There. And then looking for it to come out the bottom. We come back here. What is it? It's a short. Where to? We're looking to come back here. Now, the problem with this is you've got buy stops here, and you got the VWAP. So this is getting a bit edgy. This is my outside edge, don't forget. VPOC migration. This is becoming problematic because the market is chopping the retail price. In other words, this is too low, this is too high, this is too high, too low, too high. VPOC migration. Need to get back here. This shifts up, I push off. So now the possibility is to come further out. And I got resting liquidity, and I'm going to move this thing back out again. Bookmap has promised me in a future upgrade that these will be able to extend automatically. So I don't have to move them for you. So we'll see. Resistance. Short. Mean reversion. Where am I trying to go? Where's my support? There and there. Right? There. Variable high volume node. What does it say? Language. Too low. New retail price. The possibility is the following. If I come out here, this location, that location, all this is, you can see, if you understand how to read this, and I call this a language, I don't use any indicators. So all I'm sharing with you here, as I'm saying to you, is can you learn to speak a foreign language? Indicators are fine, but what are they? They're translators. So that's okay, except most of us have to load a bunch of them on, and they're all chattering. It's like having 10 voices or 5 all talking over each other. Sometimes it's this, sometimes it's that, and sometimes it's a stew. It's like going to an indicator smorgasbord. I'll have a little of this, so I'm going to go back for a little of that. Right? Well, if they're talking over each other and they're random as far as what happens or how you respond to them, then you're just gambling because you have no process that you can measure. That's the problem for us as developing retail traders. You get your toolbox with 100 indicators or 200, whatever you got. They all work randomly. But why do they have 200 in a toolbox? Wouldn't we just need a couple? 2 or 3? Well, why do we keep adding them? Because they all work randomly. So our belief is that since we're looking for certainty, that if we put more of them together, then we're going to have more certainty. I know it's so logical, but that's not the way the business works. It's the way our needs work. We need certainty. We need confirmation because we're wired to avoid risk. I get it. You get it. Guess what? We're in the business of risk. Where's our resistance? Isn't it up in here? So short to here, and then looking for it to come out the bottom. Rotate up, take stops. Where's our resistance? It's still here. Still here. Let's look. Right there. Short. And where's our right here? This is still mean reversion. And I think, and I was discussing these in TraderLab. Look at the structure. And the thing to understand in trading is why. It isn't because some little line of spaghetti crossed over. If I understand how the market works, and then I get a location for a trade, I can take the trade. If I understand that there's stops over this swing, and I have an outside edge and that we can come up into this swing, then I'm going to look at my levels. If I see my buyers here, where's my trigger? I don't have one here. I come up here. I got my buyers going to the moon, isn't it? Where's my resistance? It's here, isn't it? Here's my order flow. Here's my liquidity. Here's my pressure and trigger. Now, follow, please. Sellers are here. There's your iceberg. Liquidity is here, order flow. Now, I'm putting these pieces together. Now, how do I know what to do? Because I have a trade plan and I want you to see structure. This is called structured trading. Now, it may not be your thing. I get it. I'm not saying it should be. I'm saying it might be. It might do something for you that you're not doing. It might help you differentiate your results, and you have to vet this. So what happened here? I got my sellers. Do I know? Nope. What do I know? I know this is resistance, and I know I'm at an outside edge, and there's no precision. The thing about outside edges or low volume nodes is there's swings. So what's above a swing? Stops. If I come into stops and I see absorption, then I can counter rotate. So this would be my target. It's called mean reversion. There's my area. It's right here, and there's my outside edge. From all the way back there, it's right there. And now there's my trigger. Okay? See the change. Sellers took control. This price is too high. These guys were absorbed. There's my icebergs. There's my liquidity. Now I need to get short. Now, some traders are going to get short right here. Other traders are going to wait for retracement. Let's see what it does. Retracement. Scale is here, and then you're looking for it to come out the bottom or whatever it does. Watch. Resistance. Now you'd be risk neutral. Resistance. Here is where it changes. And that's my last trade was this over here. Okay? So there, scale, and now we break. And I think this is news generated. You guys have questions. Thanks for your patience. How we doing? Anthony, I'm not sure what you're asking me to type in the chat. Please give a like, by the way, if you're visiting on YouTube. Good. Yeah. By the way, there's a link down there. So this is news, all right? So this is part of the thrill of randomness. Remember, randomness. So let's come back here. I haven't seen any of this, so I'm going to just take a look, see what's going on here. Now, remember our statistics. Over a 98% probability, take out the first hour's high or low. As of here, I was looking, and this is all posted in TraderLab, that to come under here, because we have an over 98% probability, and to come down maybe here. And I post this in TraderLab. Now, news. Now, the other thing I posted in TraderLab, and this is not predictive, it's, we can't, right, is that the higher time frame is up. So in what we're doing is we're in the responsive mode, which is we're selling, but we know we're on the weak side. What we don't know is where are we going to go? Well, that's what statistics are all about. But the probabilities face the long side. But as long as I'm seeing the selling, I'm only going to trade the short side until this. And let's look at this here. Last short. See all the locations. So how many trades might you have had that have worked out okay? This is the last one. Now, the thing with this is your resistance. Even this one, you would be risk neutral. And then you're looking to come out the bottom. Now, if you didn't scale until here, then you would take a stop. This is subject to your trade plan. Everybody does their own thing. In TraderLab, it's a minimum 2-lot configuration. And the reason for that is the job of the first contract is to get you risk neutral. So the worst that happens is your broker sends you a gift basket and you scratch the trade. That's for starting developing traders. Then as you develop, you can adjust where your scales are. You develop trade management, but it's all about statistical probabilities of getting risk neutral. Because you need to know, and this is why having a structured trade plan that is fixed with anchored inputs allows you to extract statistics. So here's the thing. Psychologically, we're all fearful, and we're wired to be fearful. So we have to get over it. We're still going to feel it. So we load on indicators to avoid risk. Okay, me too, you too. Let's get over it. If you don't understand primal wiring, you're wired to avoid risk. That's why you have fear. And it worked great for when we were on the savannah with the saber-toothed tiger. Very good, with the apex predators. Assume there's a tiger behind the rock, assume you're going to be eaten by the woolly mammoth or whatever's going to step on you. So you're apprehensive, you're fearful, and you have anxiety. All these are built in to protect you. So we bring that here. And I always like to talk about it because the last thing traders think about is what's going on under the hood. It works well for you in the outside world, non-trading world. But in the trading world, we're doing the opposite. We're actually seeking risk for reward. So we're pushing back against primal wiring, and it causes us to do all kinds of things that are not in our best interest. And most retail traders are trying to solve to avoid that emotional trigger, which means certainty. Well, you're not in an environment of certainty, so you can't solve for it. So TraderLab, it's about helping you understand the environment you're in and solving for that environment, not trying to make the environment something it isn't. You can't be certain here ever. We can't. How can you be certain that there would be an announcement of a trade deal right here? Tell me how you can be certain. You can't. What you can be is following a plan that gives you an edge. And if you know this trade right here has X% positive expectancy to get you at least risk neutral, does that help you manage your fear? Even though you're going to take full stops just like everybody else. Overhead and cost of production. That's the question for this astute group of traders. If you understand methodology that works and you can extract what you need, better manage your fear. What about our fear? You put this short on. I'm just giving you an example. And now you're euphoric. You get a counter rotation. You're depressed and you bail out. All it does is come back to another entry. And now you get your downside rotation. You bail out here. Have you ever done that? Raise your hand. I've done it so many times, I can't begin to tell you. Why did I do it? Fear. And not knowing if I really had an edge, because I was looking at percent probability, not probabilities, but winners. Because we always think about, I want to win. This is not about winning. This is really about a random distribution of outcomes. And if subject to your plan over time, for example, I trade, just me now, not right, wrong, or anything, just a personal decision I made years ago. I'm looking for targets and larger rotations. It pays for my stops that I take. We all take stops. This, same thing. If I get risk neutral, great. If I don't, I take a stop and I go, well, okay. Why? I can't control the news. I can't control a tweet. I can't control anything except myself. And my plan is what gives me that. Now, this is news. I hit all my upside targets, new all-time high. Now what do you do? Now, I haven't seen this, so let's go see what we do. Now, do you have your questions? Let me look at them. Let's look at microstructure here. Now, these are not, but I want you to see something here. Now, nobody knows, right? Why wouldn't you sell this? I don't know. Would you buy this? Where did this come from? You're going to ask me. Let's look. Very interesting stuff, isn't it? Come on. Got to get back here. So, what do I know? It's a little hard for me to recognize what is here. I think I'll just gonna. Okay, I'm not going to go into, there's something I want to show you here, but I just can't read it with these lines. So I'm just going to skip it. I want to show you this. Now, these are not necessarily trades. These are just structures, okay? I'm just going to show you behavior because in TraderLab, I always encourage traders. See, this is a support area, but that's neither here nor there. Let's look at this side. Now, again, benefit of hindsight, who knows? But I want to show you structure. So here we have These are stops coming out. Everybody who's short, good luck with that. And now what happens here? Going to the moon as far as I know. Now what happens? Let's look. Liquidity comes in the book. Selling icebergs. Buy stops going off. Who's short? Don't know. Could be me, could be you, could be anybody. Doesn't matter. So let's just draw a little structure here. And the reason I draw the structure like this is sellers are here, passive side. Now we don't always see them, but why do you have green delta? Buy stops are market orders and whoever, you know. But if I get passive, and who takes the other side of market orders? It's passive. You don't see them. It's like the no-see-ems. I don't know, you know, I know this is a global audience, but we have something we call no-see-ems. That's the bugs that bite you, and you'd never see them. The no-see-ems. So we don't see them. That's the passive side. In here is high volume. I'm going to draw a little line for you so you can just see it. I'm just showing you structure. This is like a store. So right here, buyers are here, buyers are there, going to the moon. What happens here? Sellers get below the buyers. So right here, now here, sellers are below the buyers. So what do I do here? Well, my buyers are here, my sellers are here, my sellers are here. So if it's going to give me a trigger, it's got to break down and retrace. It goes the opposite. Well, I don't have a trigger. Now what? Going to the moon. Sellers are below here again. What do I think might happen? My volume is here, so it's either break high or break low. If it breaks low, now I have a trigger. My sellers are here, and where's my volume? The volume here is the same as the volume there. So this could be support. And no clue, you know. Again, no clue. I don't pick the high of the day. It's not my skill. So I'm just showing you structure again. Let's read the structure together. I get my trigger. Now this is a sweep. The sweep often indicates a counter rotation. So when I see the sweep, I'm already looking, if I was, now I'm not saying anybody should take a fade. This is counter trend, right? This is resistance. So right here, I have resistance. I see selling icebergs. I get my chopped up chop. I know I'm at resistance. I don't know what's going to happen. Resistance, break. Now this is resistance here because the buyers were there. I'm just going to throw a little line in here, and I don't know. You know. Haven't seen any of this. I'm just showing you as we go. Sweep. You guys see it? I'm just showing you some ideas, okay? Hope you're getting something from this. If you're visiting in YouTube, how about a thumb up? Are you guys following? Well, Ben, if you're asking yourself what you're doing, then you just need a plan because all we're doing here is having a plan. Now, some traders in TraderLab will trade counter trend. I do. And sometimes, you know, it's like anything else. Sometimes that's a good idea, and other times you want to step on a rake. It's just random. But if I have now this is different. You know, guys, there's so many different conditions. If I know this is news, it's not the same as just chugging along. News can create an extreme. And this is separate. So, Ben, what do you do? Well, trade plan. If I have a news plan and I see an extreme, I can sell it. But this isn't anything anybody should do unless you have a specific plan for news. Outliers. I call these outliers because when you get news, you're going to get breakout traders and you're going to get all these longs coming in on the news. And then what happens after the news? Who's ever long It's going to get thrown under the bus. And the shorts, what does the market do? Let's come back. The market goes down to go up. The market goes up to go down. The market goes rotation down to go resistance, trigger. So trigger, retracement. So trigger back. If I can't get above here, I see my icebergs. I see the liquidity. I can get short here. My stop goes above this or wherever I want to put it, and I put my helmet on. My target is here. And down here, what is this? Outside edge. We're reversing the canoe at the moment. What is out here? What looks familiar in all this? So my news-based plan, which you may or may not have, but this is another piece that you learn in TraderLab, is to fade this, come back here, take these guys out, come to my outside edge. Remember I was doing shorts, it's called mean reversion from the short side, around 64, remember? This was shorts until the news. Now you turn the barge around and you're doing the opposite. You're taking longs to come back here. This is reversion from the long side. So I can take a short here, counter trend, or use this to exit a long if I happen to be long, because it's basically a trigger for a short. If I'm only trading with the trend, I'm not taking the shorts. I'm using this for exit, and I'm looking for longs here to come back there. I'm trading from the opposite side now. Now, this might be more than you might be just your head is starting to spin, but you don't need to spin your brain. What you need to be thinking about is a plan. And it's not that you try to do all this in one piece. You start out with one specific behavior. And I always suggest in TraderLab, this is the specific behavior, mean reversion. Because the market, what is the market trying to do? What's too high? What's too low? Where is too low? It's out here, which we just kind of covered up. There, let me get some of this out of here. Just because everything changed, you see? So if I know this is a short, if I'm trading only longs now, because the higher time frame trend is up, I would exit my long and I have my sweep. Remember, sweep would suggest rotation up, location. It's like real estate, absorption. Notice the liquidity. And now where's my resistance? It's right there. That's my scale. This is mean reversion. When I was taking the shorts over here, it was mean reversion. Just the opposite process. Here, to there. There, to there. Here to, and then news. Say Laguerre. Thanks for playing. Tom, get a coupon to the buffet. Then what? News. News plan. What's this? Too high. Trigger. Retracement. Short or exit. Then what? Turn the barge around. Sweep. What does this suggest? Rotation. Where to? There. This is a long to there. It's the same as the shorts to there. Does this make sense? Sam, I think the news, guys, what was the news? It was a tariff deal with what? Great Britain or somebody? How are we doing in YouTube? Guys, if you're interested in this, you're all invited to visit the Bookmap Discord TraderLab community so you understand it's a professional community. It's a group of like-minded traders who come together to leverage their collective experience. This takes a lot of work. Now, what I share is 46 years of trading. And this doesn't necessarily mean this. There's no holy grail. There's no secret sauce. Anybody can learn this, but it's sequential. So you kind of start out learning to speak a foreign language. This is a foreign language. When I'm looking at this and thinking about it, I don't use indicators. What I found was I'm the indicator. I'm processing this information. I have taught myself and learned and gotten educated, in order flow, how to use Bookmap, which gives me insights that most other traders don't have. Remember, this is a business of edge. And we all take stops, so overhead and cost of production, we got to get over it. Now, we're all emotionally attached. I get it. You know how you feel? Quote, you notice the term feel? Emotions. I want to be right. I want that approval. I want to be smart. How about, does the dealer in the casino throw himself under a bus because somebody walks out with a suitcase of cash? No, he deals the next hand. What do? If we take a stop, we then are mentally and emotionally attached to the last outcome. We either skip the next trade or because we want more certainty, think about it, or when we get a counter rotation, if we took a short here, we bail out because, quote, we don't want to lose. What does that have to do with anything? We all have to learn to understand the business we're in and also how it triggers emotions. And if the trend is, quote, up, instead of getting short, well, I would take a short, but that's just me because I trade both sides. But let's just say you trade with the trend, which has better probabilities, by the way, other than a news structure. In other words, this is a specific plan in a plan. If I'm taking a short here, I'm either exiting along or I'm going to wait for this because this is a structured trade. This is an advanced structured trade. This is not what you're interested in. You're interested in this because the trend is up, which we know, and this is your scale. So you belong here, you're getting scaled ahead of this, and now you put your helmet on and you're looking for that. Let's look at it. Tell me this doesn't make sense to you. Would you have taken this long? It's a structured trade in the TraderLab. You would learn this. Then you have to develop the confidence and the statistics not to be fearful. By the way, I'm fearful, but not in the sense where it paralyzes me. I'm fearful because I'm wired to be fearful. My reptilian brain, which has worked well for survival of the species, cannot differentiate between intentionality and the triggering mechanism. So I'm triggered to be fearful. I also know this is my resistance. That's my scale, you see? This is still mean reversion. All I've done now, instead of being short reversion, I'm long reversion. And if you remember what I posted, that I read to you at the top of the stream, what are the trades for developing traders? It's reversion trading, outside in trading, in alignment with the trend. So in the morning, the trend was down, responsive selling, outside in, down, back, and now it's longs. If you have that plan and you have the discipline and ability to execute, and we all take stops anyway, you would have the potential to be have a profitable day. That's it. Well, anybody who's interested in this, if you find this interesting, this is really what the business of trading is. I mean, I certainly thought for years it was something else. I built trading systems. I managed funds. I have taught other traders to trade. I sat on a desk and mentored and coached traders. And the reason I'm able to do this is I've already done what you guys have done. I just spent, when you do this 46 years, you get a lot of time to go down a lot of dead ends. I coined a phrase called Trader Groundhog Day. And really, it's just like waking up in the same place, no matter how hard you work. And what I figured out, and unfortunately it took too long, part of that had to do, there weren't off-floor traders when I started doing this in 1980. Everybody was on the floor, and I thought initially that's where I was going to be going, was down on the floor. But I just got so interested in technical analysis, and initially it was just bar charts. There were no candles, no volume, no domes, no internet, no PCs. So, I was one of those people who would draw a trend line and got pretty excited about it. So that's kind of where I started. And what I'd like to mention to you guys is early on, it was classical bar charting, which is measured moves. So, and what that did for me, And that was just the way it was done. So head and shoulders, flags, the pennants, triangles, whatever it is, rectangles. Those are measured moves. So along the way, I thought it was predictive. So everything I was doing for a number of years was about predicting what the market would do. It's going to go here. It's going to do that. Is that you? That was me. And of course, because of randomness, that stuff works at times. But it didn't have an edge, which I didn't really understand. I thought, well, that's what I'm supposed to do. Then it was, well, if I had an indicator, maybe that'll be better. I shared an office with George Lane. It's in the primer webinar that has over about 33,000 views. You're welcome to see it. It's all in TraderLab. There's a link in the bottom of YouTube. No cost for any of this. And he created stochastics. So there's an oscillator. So now the Holy Grail showed up. I mean, think about it. You guys look at your MACD or whatever the heck. And this is before we had our, I think it was Wells Wilder. We came up with, RSI, Bollinger Bands, that's before Keltner, and all this kind of stuff. So, and then, Fibonacci, oh my gosh, look how predictive that is. It's going to do this, it's going to do that. And that's because we're looking for predictability and certainty. What happens if you're in an environment where you don't have any of that? So what I had to do, and then Elliott Wave and Gann, and I can't even remember. I don't want to remember because it's Trader Groundhog Day. Everything works randomly. What I had to do was go the other way and start removing stuff. That was very hard for me because everything works randomly. You think, well, I want to get something out of this. Well, what I got out of it was randomness. So randomness, unfortunately, is no different than sitting with the gamblers. You're going to have winning hands, but the house is extracting the dollars from the gambler. So at some point, the light bulb goes off and you go, maybe I'm sitting on the wrong side of the table. But I have to figure out what, quote, game has the statistical edge and what doesn't, because everything wins randomly. So I imagine having a process that, of course, that has winning trades. And yet over time, it loses. Would you keep trading it? I would hope not. Or maybe you're going to spend the next couple of years trying to make it better, but it still doesn't have an edge. Are you getting a yield? Well, what I found was I had to eliminate the things that weren't profitable. And I also had to figure out why I was making errors, skipping trades, moving my stop, bailing out, whatever it is, because I didn't have metrics that were tangible. If you don't have something tangible, all you have is emotional stimulus, fear, greed, FOMO, paralysis by analysis. Call it anything you want. I don't see the casinos doing that. I don't see the casinos making games up or changing the games. If they pay a gambler, they just deal the next hand. Why? Because the only way they get to extract the dollars from the gamblers in a random environment that they have no control over is just to execute their edge. Where's my resistance? Right there. Why would I take a long here and scale there? Because that's my resistance. If I can't get over this, too high. And then I can come out here. If I come out here, no problem. The worst that happens is I scratch the trade. All right. Then what? Then I got to see, is it just a stop pick? And if I come out here, I could come back here and out the top. If not, then say la guerre. And do you see the level and how it was created? What's the language of the market? Too high. Too high. Sellers. Resistance. Where do I come? Resistance. All right. This is called mean reversion. You can learn this. And then your job, if you're in TraderLab, is to get in alignment and wait for your trade. And then like the rest of us, you either pay the bill or you get paid. And it's always random. Hope you're getting something out of this, guys. Appreciate you visiting TraderLab. This is an advanced trader methodology, but this is the truth of the market. This is really the basis of how the market works. And if you see this is language, because what we're doing with this is we're reading a foreign language. And of course, when you use indicators, they're just Google Translate. Fine. Except they're lagging and they don't take into consideration something called context. Context is up. But at times, in a developing fractal, it could be a short. So do you just follow your indicators around? Would you have taken this as a short, or would you have gotten long there? Would you have gotten long there? Would you know to scale here? Or does your indicator tell you now to get short? I mean, what is it doing? I don't know, by the way, because I know what it did for me. I don't use them. So I haven't used indicators in so long, I can't remember. And the good news is I can't remember. I wish I could get the years back where I did, because I was always trying to make it better. And I still had winning trades, winning weeks, winning months. But overall and that's when I built trading systems, because I thought it was a matter of a better way to tune and tweak, optimize. And what you guys do when you curve fit is you're attempting optimization. So I ended up with my system design, because I was managing across a lot of asset classes. I had to have a system. I found out that I wasn't really fixing the problem. I was just letting a PC try to let the PC optimize it with walk forward testing, data chunks. But how can you fit yesterday into today, or this morning into right now? Aren't they different? So my plan has to be flexible to adjust to what's happening right now. What's happening now? This is responsive selling. This is continuation buying. This is resistance. This is resistance. I can take this trade from here to there, and that's it. Trade's over. And then either a runner for what we call the Hail Mary pass, which is who knows, throw it out there, or it's a chunk and you're just going there to there to there, and the trade can be over and you're back in your Barca lounger. Up to you. Is this making some sense? Are you guys following? Guys, if you are not in the TraderLab, you're missing out, I think. It may not be the solution for you. It's going to require you to change your beliefs. And I have to tell you, most of us really have a hard time with that, because we think it's just a matter of working harder. At least that's what I thought. And the reality was I was just not working smart, and I was trying to fix something where I had a defective process, and I was trying to fix a defective process. I was looking for certainty, right? And confirmation. Well, maybe you can't get that here in this business. So if you can't have it, you need to solve for randomness. That's what the TraderLab is. If you're interested in TraderLab, use the link in the bottom of YouTube. There is no cost for it. Take advantage of the community. Remember, it's for serious traders. It's about the business of trading. It's not romper room. You have to be respectful. You need to verify your Discord username. Keeps the spam out. A couple little things, and after that, come on in. As we say, the water is fine. Don't forget to leave a like. Visit the TraderLab community. Watch the webinars. Download the 60 PDFs of structured trades, and be sure to review these webinars and streams so you can see a consistent process that is executed in a 100% random environment. Remember, this is a business of edge. We're not interested in being the gamblers, and it's really up to you which side of the financial table you want to sit on. Either sit with the gamblers or sit on the house side of the table. Thanks again, guys. Don't forget the thumb up. Look forward to seeing you tomorrow. And thanks for visiting the TraderLab.